Hello, good morning, everyone. Thank God it's Friday. If you can hear me and can see my screen clearly, kindly type in hi in the comment section, please. Are we on the same page? Am I good? Oh, Carrie, happy Friday. Thank you. Am I good? Do I sound good? All right. Thank you for that clarification. Hey, Proverb. Hi, happy Friday. Thank you. 359. Hey, 359 is hello this morning. Good morning. How are you? Trust you're doing good. Oh, Proverb, glad to hear you are doing good. I'm fine here. I'm fine here. Great. Great to hear that, 359. Great to hear that. 566. Hi, how are you? Good morning. Are we excited today? Can I get one more hi before we begin? Ibazovic, welcome on board. Okay, I guess it's time we move on and let's kickstart the session. As usual, I want to welcome you all to yet another beautiful session of X-Trend Speed Life with my humble self, Sheriff Daramola. And as usual, I shall be taking you on a trading journey where we shall be looking and evaluating the market using different parameters that we shall be using to guide our action, and also using these parameters to identify trading opportunities lining up for us in the New York session. And also, if you have pairs, you have commodities you want us to look at, come on, feel free to drop it in the comment section and I shall take my time to inculcate it into my schedule for today. Like our typical Friday, what we do on Friday, we don't want to be too aggressive on Friday. We want to be very cautious on Friday, as we don't want to enter unnecessary trades. It's already the last day of the week. We want to be doing a rounding off of whatever trades we've taken since the beginning of the week. And if there are momentums that we see that are lining up for us, then we will take them with some advices that we shall be using to um, guide our actions forward. So without further ado, let's dive into the chart and let's see what's happening. I think we looked at how many pairs this week. We have US oil, UK oil, GBPUSD, and then we talked about the gold, yes, and then USD JPY and the Bitcoin. Then we also treated something on US tech, which we shall also be trying to look at today. And if you do have any pair you think you want us to look at, you can feel free to drop it in the comment section. So let's kickstart. As usual, our pair for today is the US oil. That's the first pair we normally talk on, and here we go. So on the US oil, we had two scenarios we were looking at for during the course of yesterday's trading session, and we were actually expecting a bearish momentum on all ramifications, and any bullish potential was actually projected to be a counter trend opportunity. As if we look at what structure has been given us since the early days of the month, we have been on a bearish drive, and because of that, we are keeping our buyers on the US oil bearish so far this week. So during the course of yesterday, we were able to identify and trade an opportunity that we were looking at. The first scenario we were looking at is that we were around this area during the course of yesterday's trading session. Hold on a second. We were around this area during our live session yesterday. We were here, and I was telling you how much we're expecting price to come back into the key level at $97 mark. EURUSD. Okay, proverb. We will look at that. I will pen that down at the moment, and then we'll look at it. Okay, so as we were saying, we were looking forward to price coming back to do a retest of the $97 mark, after which we want to be looking out for a reversal pattern that will push price to the downside. That was the first scenario we were looking at, and then we said something like if we do have a significant breakout of the $97 mark, then the retest of structure is likely to push price back into the bearish trend line around the key level at the $102 mark, after which we want to be looking out for patterns on lower time frame that will support a trend continuation to the downside. So those are the two scenarios we were looking at yesterday, and we also shared a scenario for scalpers and counter trend traders, that if we see a breakout of that neckline, a retest pushing to the upside, you could actually take that bullish momentum. But for long-term traders, we were actually looking for a bearish move, as we want to wait for price to come into the key level before we take that move to the downside. Now, the second scenario never happened, and the scenario we saw how price came back into the key level area, and we can see what has been happening in the last 24 hours. Price came into the key level at the $97 mark area, and then we started seeing scenarios that looks more like a reversal pattern here with. Then we saw a breakdown of that structure, price came back, and then we are moving to the downside from here. So if you are taking that opportunity, kudos to you for identifying that opportunity at this point, as we will be around how many pips in profit now, around 150 pips thereabouts in profit. And what we want to be looking out for as we head into the New York session is what? So the first thing I will be saying at this point is I will advise that you move your stop loss to break even at this point, and I will be explaining to you the reason why I'm saying that in a jiffy. If we look left, we can see that we have an area here which has been a demand zone. We can see how this area has been a support level that pushed price to the upside, and then we can see that this area also at one point in time being a demand zone that actually pushed price to the upside from there. So we have a rejection of this area during the early hours of yesterday, and then there is another sharp rejection here, which we don't know if it's going to hold at this point. So I want to be projecting that this is likely going to be a demand zone thereabout. So this is the reason why I'm saying that we should move our stop loss to break even, so that we don't get caught up in an unnecessary spike, which might push us back into the bullish perspective, and we don't want to lose the position we are already in at this point in time. So with this observation here, I want us to put into consideration the possibility that price could actually go bullish anytime from now, and if we can only be comfortable if we see further breakdown of that level, that is breakdown of the previous low here at the $94, is it $94.60 area. If we can see a break below this level, then we can be comfortable of the selling position we are in at this point in time. And if there is a breakdown of that area, a retest of structure definitely should welcome another position after the citation of a reversal pattern on lower time frame to push price into the potential demand zone. So for our selling position right now, for those who are already in that selling position right now, Remember, our take profit target is still within this area between the $89, $90 mark and the $92 mark area. And let's see how price action is going to play out in that regard. So like I said, I'm still thinking this area is going to be a demand zone. So what if that happens? What are we going to be doing? That is, if this area, if we finally see that price did not break below this previous low, we have this low here. Let's give this, so we can see that this area has been holding price action since in the last 24 hours. And let's see what's going to happen. If we're going to see a breakdown of this level, then a retest of structure should welcome an addition to the end to our existing position. However, if we do not see the break below the previous low here, and then we see something that looks like this, that is, if price comes back to break out of the key level at $97 mark, that means our selling position will be closed out at our break-even level, and we want to wait for price to come back to do a retest of this $97 mark to give us a potential opportunity for bullish potential if we cite reversal patterns on lower time frame. So these are the two scenarios we are looking at this week. Today, like I said, we are looking at, there's a possibility that price will push from this side. This is a strong demand zone in the past. So let's see how price is going to react to this level during the New York session. If we have a breakdown, then we can be comfortable that our selling position is good. However, if we have price go up from this area, hereby breaking out of the key level at $97 mark, then a retest of structure, that is a retest of this $97 mark, should give us that potential for the bullish momentum. So at the meantime, our bias remains bearish, not until structure states otherwise. And when structure states otherwise is when we have a break above of the key level at the $97 mark. So this is my scenario here on the US oil. If you have any questions or you need further clarifications, feel free to drop it in the comment section and I shall be willing to be of help in that regard. So I'll be pausing the video at this point. I'll be taking the between 10 to 15 seconds to look at the charts to see if there are any questions whatsoever to be attended to, after which we'll move on to the next pair. Ibazovic, hello, how are you? John Rell, good day. Zibelem, bonjour. Okay. Any questions? Halem, hi. Okay, in the absence of none, I assume we all understand what I've just explained. So we want to move on to the next pair, which is the UK oil. So on the UK oil, as usual, we expect to see a similar scenario. However, what happened here on the UK oil is more or less a significant retracement phase. Hold on a second, let's delete this. Let's delete this, okay. So we have a beautiful scenario here on the UK oil. We expected, I gave you a scenario yesterday where two scenarios we had yesterday. We were expecting price to come to either do a rejection of the $104 mark before we saw the move to the downside, but we never saw that rejection happen as price broke above that level. And then the other scenario I also mentioned was that if price comes back into the $105.50 mark, we look out for reversal pattern within this area to join the decline to the downside, which actually happened. We saw the rejection of this level here the first time, and then we saw the rejection the second time, and boom, price is moving in our direction. So we have how many pips in profit at the moment? We have over 250 pips in profit at the moment. If you are taking advantage of this potential opportunity, I want to say kudos to you for being on standby to take advantage of this move. Now, what are we going to be doing at this point in time? The first thing I'll be saying at this point is we want to be locking in our profit. So we want to move in our stop loss to somewhere right above the $104 mark, at least to save some of the profit we have made so far, which would dovetail to I think over 140 pips. That is right above that $104 mark. Let's see how price action plays out. So as we head into the New York session here, what I'm looking forward to is the possibility that price comes back to do a retest of the key level at $104 mark, where I see look out for patterns on lower time frame that supports a trend continuation to the downside from here. So if this happens, that is, we see price come back to do a rejection of this $104 mark, then I want to enter one more position to my existing trade. So we have two trades running on this one, hereby maximizing our profit on this trade. So that's the scenario I'm looking out for in the UK oil. However, you remember that the scenario we normally have on the UK oil and the US oil are always similar. And since we have a possibility that we could be having a bullish potential on the US oil, we should also look at that scenario here too if we have something like that happening. Well, if we look at the last 24 hours here, we can see that we saw the first rejection of this level at $101.50 mark area, and price rejected that area. We can see that. So let's see if price is still going to come into this level. If price comes into this level, I want you to move your stop loss right below the $104 mark. You see, what we want to be doing here is we want to be guiding our profits as it moves in our direction. We're already on the last day of the trading week. Anything could actually happen. Some traders who have actually taken advantage of an opportunity during the course of the week might want to be doing quick sales here to grab them some profit for the weekend. So anything could actually happen in this market. So what I'll be saying is when price moves into the $101 mark, I want to suggest that you move your stop loss right below the 104 level and let's see how price action plays out. However, if price comes into this area and we see multiple rejections of this area, then we might be looking forward to a bullish potential. But for me, for this week, I will just say we should hold on and let's see how price action plays out as the week comes to an end. And then on Monday, we could come in fresh to look out for new opportunities that we could be trading for the week. So one thing I'll be saying here is let's wait. Even if we have rejections here, make sure our stop losses move right below the $104 mark. At least we'll be having around 160 pips to catch there if that happens. So we are profitable on this one so far. So let's hold on to our position, move our stop loss to somewhere above the $104 mark so that we can lock in some profit at this point. So our take profit target still remains at around the $100 mark. Let's see how price action plays out, and we will see next week to decide what we are going to be doing going forward. So this is my scenario here on the UK oil. If you have any questions whatsoever, feel free to drop a comment in the comment section so that we can take a quick look at it together one more time. Okay, Scott Benji, good morning to you. How are you today? GBPAUD. Scott Benji is seeking for. I just wish I'll be able to do this. I think we have a lot of pairs lining up for us, as we already have requests for the EURUSD before now. And let's see how time goes by. Okay, 543, you new here, welcome on board. I advise you stick with us through the session, listen to me, and if you have peers you want us to look at, feel free to drop it in the comment section. With time, you get to understand how this works. But simply what we do here is we come here to look at the markets together and identify trading opportunities lining up for us during the New York session. So that's basically what we do here. And if you have peers, we share, we look at it together and identify opportunities. That's simply what we do here. All right, Bali, how are you? Okay, great. In the absence of none, let's move on to the next pair. So the next pair we are looking at is GBPUSD, where we were expecting a bearish scenario. I told you how we've been in a bearish scenario since in the last 2 days for me personally, and it appears price is moving as expected on this one. We saw the breakdown of the neckline um, on Tuesday. We saw the breakdown of the neckline. Price came back to do a retest of the neckline. Then again, it did a retest before we saw that move to the downside from here. And then price came back into the neckline again one more time to push price to the downside from here. And it appears price is still respecting that bearish trend line we identified yesterday. This bearish trend line here that I'm waving on your screen, price appears to still be respecting that trend line. So I would like to extend that trend line a little further into the future, and let's see how price action plays out at this point. Then what I'll be advising us to do at this point is to move our stop loss to somewhere around the 1.19750 area, and let's see how price is going to play out going forward. So this is the scenario we're looking out for. So we continue to follow and guide our position as price action continues to move in the direction that we have projected here. So I'm still expecting price to still break the 1.192 area, retest of structure, and retest could actually welcome another position to the trade. And let's see how price action plays out into the 1.181 area. I'm not sure if this is going to happen today, but let's see how price action plays here on this one. So there's nothing really new here to add here, unless the other scenario which I explained to you yesterday, that if we see a significant breakout of this bearish trend line, I mean a significant breakout which also breaks above this neckline here at 1.2 level, then we want to be looking forward to a retest to join the rally to the upside, which is yet to happen. And I'm not sure if that's going to happen, but if it does happen during the New York session today, we see a significant breakout of that bearish trend line, then we want to be patient to see price come back into this key level or probably the trend line, and look out for patterns that support a trend continuation to the upside. And if that happens, our take profit target is going to be around the 1.21 area, just around this area. It could be between the 1.2 and the 1.215 area for our take profit target, which could dovetail to approximately 100 to about 170 pips to catch, 180 pips to catch there if that happens. So this is the scenario we are looking out for. I'm still expecting a bearish momentum anyway, but if the breakout of that structure happens, then we should put in mind that we might be having a shift in trend at this point. Are there any questions? Okay, so let's move on to the next pair. The next pair we deliberated on yesterday was the XAUUSD, and we saw a breakdown of that demand zone during yesterday's session. We analyzed this, and I told you how we should see price come back into the this area or this area for us to join the decline. However, we can see that price has broken out of that level and price came back into the bearish trend line here. So let's go to the daily time frame to see what is happening so that we can project a possibility here. So now here on the daily time frame, we can see that price has been respecting a bullish trend line in the last since the beginning of the year. This bullish trend line here, price has continued to respect that bullish trend line. Price has continued to respect that bullish trend line. You can see until we finally saw the breakdown of structure during the early days of this month. And then a breakdown of structure, we all understand that from a technical perspective. When we see a breakdown or breakout of structure, we expect price to come back to do a retest of that structure to confirm that price actually going in the prior leading price action, which is bearish here. So are we going to be seeing price continue to go to the upside to do a retest of that bullish trend line, or is price going to move to the downside from this area? So when we scale down to a much lower time frame, like I think the 3 hours or 2 hours time frame, we were able to identify a bearish trend line that was holding price action for some time. Hold on a second. This red dotted line that I've identified here has been, hold on a second, allow me to extend this a little further into the future. So we have this bearish trend line that has been holding price action. We can see if let me give you a visual representation of what I'm talking about. We saw this price was respected, then it was broken out here, respected again one more time, and then we saw how price was respecting it until finally we saw a breakdown of that trend line here, and price continued to respect it right around this area. So one thing I want to be looking out for is price going to respect it here, because right now we have price right around that area, around that trend line here. So now we have two scenarios to look out for going into the New York session from this perspective right now. Now we have two scenarios. What are the scenarios we are looking out for? The first scenario is that price could probably respect this level, this bearish trend line, after which we could see a move to the downside from here. We could see a downtrend from here, or we could probably see price come back, break out of that trend line, do a retest of structure to push price to the upside from here into this major bearish trend line we identified on the daily time frame. So we have two scenarios we're going to be looking out for. So now as we head into the New York session, how do we intend taking advantage of this potential opportunity? Well, the first thing we want to be doing is to identify a key level that will guide our action. So what does this key level do to us? This key level is more or less a parameter we normally use so that whenever we find ourselves doing the New York session, we should be able to know, okay, are we going to buy or are we going to sell? So how are we going to identify this key level? Well, if we look left, we can see that we have structures that we can play with. This area has one time been a demand zone. That's the first structure we have here. Then we saw a breakdown of that demand level. Then this area became a resist supply level after a retest of this level. Then we have a supply level here. We have a supply level here. Then it appears price came back again into this level, which we are not sure what's going to happen at this point. Is it going to be a supply level that will push price to the downside from here, or is it going to turn out to be a demand zone after a breakout retest of structure to push price further up? So one thing I just want to take out from this area is that we have this area at $1,716 area as more or less a key level. So I want to bring out my line chart here so that I can identify specific points that I want to be using. So if we bring that out here, we have somewhere around, I think 1,720 appears to be most appropriate. Okay. I think 1720 appears to be most appropriate at this point. So our key level is always gold. Then let's give it, let's label it for the sake of clarity. Key level at $1,720. So we have key level here, and hold on a second. So this is what we have around this point. So now, like I was saying earlier, the key level will serve as a yardstick. So if we see price oscillating right below the key level, then we are comfortable of taking a selling momentum. And if price continue to oscillate right above that key level, then we want to be looking out for bullish potential opportunities during the New York session. So how do we do this? How do we take advantage of this move? So the first scenario, like I explained earlier, is that we want to see price respect this trend line to push price to the downside. And before we can enter that bearish momentum, we want to be looking out for confirmations. So let's go down to the lower time frame, where I will be explaining to you how we should be taking advantage of any potential opportunity lining up for us during the New York session for any selling opportunity here. So the first thing, okay, we have the scenario here. So one thing, we have the first rejection of this trend line. We have the first rejection. So I want to see price come back below that key level and probably do a retest of the key level to give me a signal that we are going bearish on this one. So let me give you a recap of what I'm saying. The first scenario is price has rejected, has tested this trend line. I want to see price come down below the key level at $1,720. Then price come back to do a retest of either the bearish trend line or the key level to give us a signal that price is going to the downside from there. And if that happens, then where will our take profit target be? Well, in the meantime, we don't want to be too over ambitious, as if we look left, we can see that we have an area very not too far away. I think 2 days ago it was a demand zone, and we want to be looking at our take profit target around that area, at least for the meantime. Let me move this up. We want to be looking for our take profit target around this area, at least for the meantime. Let's see how that is going to play out, and which will dovetail to right below the key level. We should dovetail to about 3,000 pips to catch here if price moves as expected. So remember, if we are selling the gold here, we want to sell right below the key level at $1,720 area, and that is going to happen after we've seen our confirmation right below that bearish trend line. Now, the other scenario we want to be looking out for is if we have a significant breakout of this bearish trend line. We have a significant breakout. Probably it could go into the $1,740 mark, possibly. But one thing, most important thing, is I want to see an engulfing candle strike right out of this bearish trend line, and I want to see price come back to do a retest of either the key level at $1,720 mark, or probably come as far as rejecting this bullish trend line, after which we look out for patterns on lower time frame that supports a trend continuation to the upside. And remember, our take profit target will fall right around this bearish trend line here, as we want to see how price action is going to play around that bearish trend line to know what we are going to do afterwards. But for now, we should be aiming at about how many pips that is from here to around this area. That's about 4,000 pips minimum to catch here. So let's see how price action plays out here. This is my scenario on this one, and let's see what's going to happen during the New York session. Then before I close this this analysis, if we see that bearish momentum happen, that is, we see price continue to break down the key level, retest it, and come to the downside from here, one thing I'll be advising is as soon as price comes into this demand zone here, the demand zone has been here, we want to move our stop loss to break even or lock in some profit right above this bullish trend line, as there is a possibility that price could come into this area and push up to the upside from there. So one thing we want to be doing, as soon as price comes into the demand zone here, we want to start shifting our stop loss accordingly to protect our position from unnecessary or sudden spike. So this is my expectation here on the gold. If you have any questions or you need me to shed more light on an aspect in what I've discussed so far, feel free to drop your inquiry in the comment section. As I take the 10 to 15 seconds off to look at what's happening in the chat. And Lilam, hi, how are you? And Annabag. Bank. Good morning. Hello, Win King. Good morning to you. I'm glad to have you around and trust you're doing well. So that is my scenario here on the XAUUSD. If you have questions, I want to move on to the next pair. If you still have questions, you can drop in the comment section and I will be willing to look at it. So someone was asking for the EURUSD, so let's quickly do the EURUSD before I talk about the USD JPY. I hope that is okay by everyone. 8EE, good morning to you. Trust you're doing well. I assume you're new here. That's the first time I'm seeing that number. But anyways, you're welcome. Glad to have you around. So we want to move on to the EURUSD. Let's see what's happening on the EURUSD. So on the EURUSD, let's have a clean slate here. On the EURUSD, here on the 1 hour time frame, we actually had this selling opportunity zone identified last week, but price did not come into that area. But we saw multiple rejection of this areas. As soon as price left this demand zone on the 15th of July, price came into the supply zone at around 1.02700 area, and as we can see multiple rejection of that level. Price came back down here, rejected it one more time before pushing to the downside from here. So that level at 1.02500 area appears to be a very strong selling niche for participants in this market. And since we saw the breakdown of that demand zone here, hold on a second, let's go to the higher time frame so that I can explain to you in detail what we are actually looking at on the EURUSD. So if you look at the structure we have here on the EURUSD, the momentum drive here since the beginning of the year is more or less of a bearish bias. And if I give you a visual representation of what I'm talking about here, you can see how price has been respecting that bearish trend line. And in the month of May, we found a demand zone which appears to have held price action supported for, I think, for about a month thereabouts before we saw the outright breakdown of that demand zone during the early days of the month of July. And since price tested the 1.00 mark area, we begin to see price continue to find higher highs and higher lows, and price has come back into the supply zone at 1.02500 area, which appears to be rejected in the last couple of days. So now, going from this juncture in this market, from this area in this market, what is going to be our expectation? Are we going to be seeing price continue to downside from this area after noticing how this area has held price? This area has resisted the buyers in the last couple of days. We can see this area has resisted buyers in the last couple of days. So is there a likelihood that price will come down to the downside from here? Or are we going to be having a breakout of the structure where price comes back to do a retest to push price into this bearish trend line before that downtrend scenario happens? These are questions we will be asking ourselves, and it's appropriate that we scale down to a much lower time frame so that we can look at what price action is doing around this time. So if we scale down to a much lower time frame, like the 1 hour time frame, we begin to see things more clearly. So on the 1 hour time frame, this is what I have observed. The first thing we should observe here is that we had a demand structure here, which held price supported for like a couple of days before we saw that impulsive move to the upside from here. And one important thing about our impulse leg is this: it was able to break out of this temporary bearish trend line that was holding price action since the beginning of the month of July. So we saw the breakout of that bearish trend line here, and this is what we have. We saw the breakout of that bearish trend line. Price went all the way up into the 1.02780 to 500 area, and we started seeing a scenario like this. So this move at this point now, is this going to be a retracement phase of the previous impulse leg? Well, we don't know yet, but one thing for sure we want to know, we all understand, is that after every impulsive move, you should expect a retracement into our golden zone area, after which we want to be looking for patterns there to take advantage of the trend continuation. So since we already identified an impulse leg here on the 1 hour time frame, we expect price to come to retrace back into our golden zone area, after which we look out for reversal pattern to join the trend continuation to the upside from there. So I'm expecting a bullish momentum at this point, but where is that momentum going to take place? Because if we look at the structure here, we don't know when this retracement phase is going to end. So we expect it to end at least between the 50 and the 78.6%, which is our golden zone area. So if we bring out our Fibonacci retracement tool and run it through that impulse leg, what do we have? We have between the 1.01200 area and the 1.0100 area as an area where we want to be looking out for a bullish potential. So what I'm saying simply is this: I want to see price come right into it. Could reject this key level or come as deep as this. But one thing I want to see is this: I want to see a reversal pattern. It could come in the form of a double bottom structure, or it could come in the form of an inverse head and shoulder pattern. Depending on whatever it is, a breakout of structure, then we want to join the rally to the upside from here. So for the EURUSD, I will advise that we remain patient to wait for price action to come into the zone where we want to be looking out for trading opportunities from this area. So we really don't want to jump into any trade. Like I told you, we're already on the last day of the trading week, and it's peculiar that these days are always very, very sensitive. So we don't want to just take any trade, unnecessary trade thereabout. So let's be patient enough to wait for price action to come into at least the key level we have here at 1.0100 level, which is the neckline of the reversal pattern that was identified here. We have a reversal pattern here. We have this reversal pattern here. So this is like the neckline of that reversal pattern. So let's see price come into this area before we look out for patterns that will support a trend continuation to the upside on the EURUSD. So this is my expectation here on the EURUSD. And if you have questions whatsoever, somebody who asked for the EURUSD, I hope you're still around in the house. If you have questions, feel free to drop it in the comment section, and I will be willing to be of help in that regard. Okay, Proverb. Is Proverb still in the house? Okay, Proverb. I hope you don't. I hope you clear and understand what I just explained so far. And like I said, if you have questions, feel free to drop in the comment section. I will be willing to be of help. Okay, can we move on? So then, okay, you're welcome. You're welcome. Scott Benjis was asking us to look at GBPAUD. On GBPAUD, I'm not sure I have a perspective yet on GBPAUD. Though I've been trading this pair, but I'm still waiting for a formation to form. It has been on a consolidation phase for quite a while, and the consolidation phase has been bearish. But one thing the only structure I can identify here is that we had a demand zone during the first days of this month, which was finally broken on the 19th of July, and we can see a divergent channel here, which is being respected. So on a short term, I'm expecting price to actually come back into the demand structure, this structure here. I want to see price come back to do a retest of this area, after which I want to look out for patterns that will support a trend continuation to the downside. And I'm not sure this can happen this week. So on the GBPAUD, I will just advise that we remain patient here to see how price action plays out. I think that's the major thing that's the thing I will say here. And if we look left here, if you look left, if you go as far back as the month of April, we can see that this point here has been a demand zone. We saw the first demand zone here, and then during the early days of May, we saw another area here that was a demand zone, and then in the early days of June too, this area was also a demand zone, and this area was also demand zone, but this area has been broken. So let's see if price will come into this level before we see that move into this area. Then we look out for that trend continuation to the downside from there, or if probably price is going to break above that demand zone and return to that structure. So this is what I'm looking out for. So what I'll be doing here is just to identify that demand zone, and then looking forward to price action coming into that level for me to take advantage of any bullish potential here. So let's label it a demand zone for at least for now. So price is right within that demand zone. Okay, we have a very big demand zone here. So we have a demand zone here, which price is finally back into that demand zone. So I want to see how price is going to react to this zone. So if we see a rejection of this zone, then you might want to be taking a counter trend opportunity. That is, price come back into this area, or you wait for price to come into this area before you take that sell. So for me, let's be patient on this one. Let's wait for price. Let's see how price reacts to this demand zone. And then whatever happens, if we say reversal pattern, you want to take a counter trend opportunity, or you want to wait for price action to come into the previous demand structure to take advantage of a bearish bias from here. I hope my explanation is clear. Scott Benji on GBPAUD. Biggie Box. Okay. Mimi91. Hi, how are you? Ashitaka wants us to do Euro South African Rand. Okay, let's look at that. Let's look at Euro South African Rand. I actually don't have that on my watch list anyway, but we can take a quick fresh look of this pair. Okay, so on the EURZAR, the first thing we observe here is that we have a bearish momentum here. That is very, very evident, considering if we look at what has been happening since the beginning of the year, we can identify that price has been finding lower lows and lower heights. So the first thing we want to be doing here is to connect the series of lower heights. And how do we do that? We bring out our line chart and then run our trend line through the lower higher lows. And what do we have here? I think this is too thick. I want to make it a little bit lighter. Okay, that's good. So we have price has been respecting that trend line since the beginning of the year. As we can see, we have the first rejection, we had the second one, we had the third one, and then we saw this huge expansion that took price right into the 15.665 ZTR, and then price came back to do a retest of that bearish trend line, giving us further confirmation that we are going bearish. But what we saw here is that the expansion here wasn't as huge as the one we saw here. So the expansion here was very short, which emphasized the bullish potential at this juncture in the market. Then we saw the breakout of that trend line in the later part of June, and then price went as far as the 17.6 level, and after which we are looking forward to, we saw the multiple rejection of this level. So what do we want to be doing going forward? With the structure we have here, definitely we have been on a bearish trend line, and we saw a breakout of that structure during the month of June. And one thing we understand is this: whenever we see a breakout of structure, we expect price to come back to do a retest of that structure to give us that momentum that we are going in the direction of the previous breakout. So from a technical perspective, if you ask me, one thing I want to be looking out for is that price is likely going to come down to do a retest of this trend line, after which we look out for reversal patterns that supports a trend continuation to the upside. So this is a long-term perspective anyways. And if we look left, we can see that we have a demand zone right around here. We can see this area has been an area which has pushed price to the upside in the last 2 months. We saw the first rejection here, which pushed price up. Then we saw the second rejection here, which pushed price to the upside, giving us a clue into the possible strength of this level at this point. So I want to be labeling this area our new demand zone going forward. So we want to be looking forward to price coming into that level, into that demand zone, which also interestingly shares a confluence with that demand zone level, with the bearish trend line rather. And then we look out for patterns on that area that will push price to the upside from here. So this is my expectation on a long-term perspective. So now let's scale down to a lower time frame to see how we could take advantage of probably a trade on a short-term perspective. Well, before we do that, the first thing I want to be doing is to identify that we have a supply niche around here, which you can see. If we look left, we can see that price at this point, as soon as price comes into this area, we saw rejection of that level. Even as far as if we go as far as look at as far as 2021, that area has been a supply niche. We saw that area, supply niche. You can see when price comes into this area, it pushes price to the downside from here. So giving us a clue into the significant strength of this area for selling momentum. So with this in view, I would like to label this for the sake of clarity so that we don't get things mixed up here. So let's label this the supply zone. So we already have our supply zone identified now. So we have our supply zone identified here, and we saw multiple rejection of that level here during the last 3 days. We saw sharp rejections of this area, supporting that this area is more or less a very strong supply zone going forward. So let's scale down to a much lower time frame and let's see how price action is playing out at that point. Now, if we go down to the lower time frame, Interesting enough, we saw that price has formed a double top structure. What do I mean by that? We saw this impulsive move to the upside from here, and as soon as price tested the 17.6 level, we saw the first move, we saw the second rejection, and price has come back to the neckline of that area. So from a technical perspective, this is a double top structure, which is more or less a very strong significant reversal pattern. And one thing we want to be doing is to look out for the confirmation of the significant reversal pattern. Let's identify it first. We have this area has been rejected the second twice. So we have this area to be holding as our double top structure. So let's label it for the sake of clarity. So we have a double top structure here. And you know that when we have a double top structure, we should expect a neckline. And if we look around this area, we have our neckline right around here. We have our neckline here. So let's identify the neckline, bring out my line chart here, and let's have a specific identification of this neckline. So we have the 17.4 area as our neckline area, and let's give that a golden color, which is going to also serve as our key level. Sorry, that's not what I expected. Okay, so let's label it for the sake of clarity. So we have a key level at 17.4 ZAR 17.400, which is also a very strong psychological level. Let's place at the right hand side on the bottom. So we have our key level here. Now, for a reversal pattern to be confirmed, we expect that price will break below the key level, which has already happened. We already have a break below the key level at this point, giving us a confirmation that this is a strong double top structure. So what we want to be looking out for is price coming back to do a retest of this key level. We already have a signal. Remember, we don't get too excited at the sight of a signal. That's always my mantra here. We don't want to get too excited at the sight of a signal. We look out for this signal has happened. Then we want to wait for price to come back to do a retest of our structure, which is, it could come around this area, it could come around this area, depending on wherever it is. But one thing I want to let you know is that around this area should be where our retest of structure should happen, around this area. So we look out for price coming into this area, do a retest of this area, then go to our lower time frame to look out for patterns to support a trend continuation to the downside. So this is the scenario we are looking out for on the EURZAR. So let's see how price action plays out in that regard. So we are waiting for price to come into, so let me label this area selling zone, which is also our neckline area. And let's give this a green. All right, so I think we are good now. Okay, I think we are good here. So on the EURZAR, this is what our expectations are. So we want to wait for price to come into this level, then we join the decline as soon as we see a rejection of that level. So we don't want to be too over ambitious here. So actually on a long-term perspective, we want our take profit target to be right within the demand zone here, which would dovetail to about how many pips that is, over 700 pips to catch here if price moves into that direction. But one thing I'll be advising you is this: look at the previous demand zone, which is around this area. Let that area be your first take profit target zone. Within that area should be the first take profit target zone, which dovetails to how many pips? That's around 380, 400, 450 pips thereabout. Then if we see a breakdown of this level, a retest of structure, then you could add position to your existing trade and push price to the downside from there. So this is our expectation here on the EURZAR. I hope I made myself clear. Who's that? Ashitaka, I hope you're still with us. I'll take that as a compliment. All right, I'm glad I made your day. So that is what we are looking out for on the EURZAR, and I I hope there are no questions regarding that. So if there are none, so let's just. I think I'm already out of time. Okay, okay, Ashitaka. So let's quickly do a recap of what we talked about today so far. I'm already out of time. So the first pair we deliberated on today was the US oil, and what was our expectation here on the US oil? Remember, we were taking a selling opportunity. Remember, we are taking a selling opportunity here. I hope my baby is not disturbing too much. Let me know if the sound is still bearable. If it's not, we can make adjustments. Okay. So on the US oil, we were expecting the bearish momentum. We took advantage of that move at the rejection of the key level here at $97 mark yesterday. So right now we are in profit of how many pips? Let's see. Price is moving really fast. 250 pips in profit right now. Kudos to you if you are still in this trade. Move your stop loss, lock in some profit at this point. That's my advice at this point. And let's see if we are going to have a breakdown of the structure. So if we have a breakdown of the structure, then we want to be looking forward to breakdown, retest, then we can add one more trade to this position. If we see reversal patterns on lower time frame here, remember our take profit target is right within the $90 mark and the $92 mark area, which we still have about how many pips to go now. I think we still have around 300 pips to catch if price continues in our direction. So this is the scenario. Kudos to you if you are still in this trade. So let's see how it plays out during the New York session. And I also mentioned that if we see a breakout of this key level, a retest of that structure will send price into the bearish trend line, after which we look for downtrend scenario from there. So let's keep our fingers crossed. If you are still in this trade, kudos to you. If you are not, if you missed this move, then you might want to wait for price break below this area. A retest of structure should welcome another position to enter the trade. Now, the next pair we talked about is the UK oil, and the UK oil is still moving as expected as well. We have how many pips running in profits at this point? We have around 300 pips in profit on the UK oil. So let's see how price action plays out from here. Our take profit target still remain at around the $100 mark. So let's hold on to our trade, move our stop loss to below $104 mark. Like I told you, as soon as price comes into this level, please move your stop loss to 104, which is about how many pips? That is, if that's about 200 pips, I think if we see any sudden spike, you wouldn't be in a losing position. Then we moved on to talk about the GBPUSD, where our bearish momentum still holds, and the bearish trend line here is still holding that bearish bias. So let's still hold on to our trade as expected. And if we see a breakdown of the key level at 1.19200 area, a retest of structure should welcome addition to this existing trade. Then I also made mention of another possibility where if we see a breakout of this bearish trend line, that is a significant breakout, a breakout that sees price action break out of that neckline at 1.2 level, break above it, then that's a bullish signal for us. Remember, we don't get too excited at the sight of a signal, as we want to wait for price action to come back into our structure, which is the trend line here, or the key level at 1.192, after which we look out for reversal patterns to join the rally to the upside. So that's the scenario we're looking at the GBPUSD. Then we move on to talk about the XAUUSD, where I told you how much I'm expecting the selling buyers on this one. And then we have price right within our resistance level here, the red dotted line on your screen. So we identified the key level here at $1,720 mark. And one thing I'm expecting for any selling momentum here is we want to wait for a signal, and that signal should come in form of a breakdown of this neck of this level at $1,720 mark. We look forward to a retest of structure. We look forward to a retest of structure here, and then we take advantage of the bearish potential into this area. So the first scenario I said is this: let us have our first take profit target at around this previous demand level, which identify around $17 or $1,702 area. Our first take profit target. Then if we see a breakdown of this level retest of structure, then we could join the decline to the downside from here. Then the other scenario I made mention here is that if we see a significant breakout of this area, that is, we see an engulfing candle right above that trend line, then a retest of this key level at $17,720 mark with reversal patterns will give us the leverage for a bullish potential, with a take profit target sitting around the 1750 and the 1780 area, which also shares a confluence with that temporary bearish trend line we identified on the 4 hours time frame. Then we later went on to talk about the EURUSD, I guess. Yes, the EURUSD. Yes, I said we should be patient on this one. Let's wait for price to come into our buy zone here. Let me label it. Like I used to say, you can screenshot my screen so that you can use it for reference purposes when you're about making your own individual decision. So you want to be patient enough to wait for price to come into either this buy zone. It could be the key level at 1.0100 area, where we look out for reversal patterns to join the rally to the upside from there. So that is the first scenario. That's the scenario we are looking out for on the EURUSD. Then we went on to talk about the GBPAUD, which Scott Benji brought on, and I said we should be patient on the GBPAUD as we are right within a strong demand zone. If we look left, we saw that this demand zone has been holding price action in the last 2 months. We saw the first one here, we saw the first structure here, we saw the second structure here, and we saw the third structure around this area, and then we are right here again. So we want to be patient enough to see how price action reacts to this level, after which whatever happens afterwards, probably we could be seeing a reversal pattern from here. It could be a double bottom structure, an inverse head and shoulder breakout of structure. So I said price move into this level, the previous demand zone here that was broken during last week trading session. We saw the breakdown of this demand zone. So there is a likelihood that price will come back into this level before we see that trend continuation to the downside from that area. Downside from this area. So let's see how price action plays out from this point. So be patient enough to wait for structures to align for us so that you can take a very good entry point. Then we closed with the Euros South African Rand, which Ashatika, I hope I pronounced that name correctly. Ashatika asked us to look at EURZAR. So we were looking forward to price coming back to do a retest of that key level we identified at 17.4 area before we join the decline to the downside from here. So this is the scenarios we are looking out for during the New York session. I hope we touched almost 1 2 3 4 5 6 7 8 pairs today. Wow, that's quite a lot of opportunities lining up for us this New York session. So let's see how price action plays out. Unfortunately, I will not be with you during the New York session, but trust me, I'm going to be around with you next week, Monday, same time, 10 a.m. UTC, 11 a.m. West African time, same place, Extra Speed Live, and we shall be here again to visit the chart, and let's see how well we've done so far and what opportunities are lining up for us for the new week. So on this note, I wish you best of luck during the New York session today, and I wish you a wonderful, wonderful weekend. Bye bye everyone, and good night.